One of the world's biggest mining companies, Rio Tinto, released their half-year results and plans to start producing lithium in a couple of years. Here's what you need to know. Rio Tinto reported their earnings, or EBITDA, surged 118% to $21 billion, and that was in line with expectations in the half year. But nevertheless, the rise in earnings was thanks to prices rising in iron ore, aluminium, copper and gold. In terms of surprise and delights for shareholders, Rio's net cash rose to $3.1 billion, and that was thanks to Rio Tinto paying out a lot less tax than expected. So in turn, Rio declared they'll pay a $5.61 dividend per share. That's in US dollars, and that's equivalent to $7.60 in Aussie dollars. And that implies Rio Tinto will be paying out a record 75% to shareholders. That's extraordinary and was more than the market expected. Now, what else to note? Well, now Rio Tinto's earnings, 82% come from iron ore. But that could change in the future. But for now, this is a bit of a risk for the group, because if the iron ore price retreats when Brazilian supply comes back online, that could mean that Rio Tinto's shares pull back. However, long term, Rio Tinto is trying to future-proof the business. They committed $2.4 billion toward a battery-grade lithium carbonate project in Serbia, and that's hoped to be the largest source of lithium in Europe. Now, construction of that project starts next year. Production kicks off in 2026. And Rio Tinto also sees strong demand growth for this project, around 35% demand growth per year. As for Rio's outlook, they maintain their full-year guidance. They say that their guidance is on track. They've got a healthy cash position, effectively no net debt whatsoever. However, Rio Tinto's results, they're hugely dependent on the iron ore price. So that's why Rio Tinto could see a pullback. And this is in line with most investment houses expecting the iron ore price to halve in a year. Rio Tinto shares are up 19% this year to $132.27. Citi has got Rio as a buy with a $135 price target. It's a hold stock for Morgan Stanley, a $127 price target, and Rio is a UBS sell, a $104 target.